Bloomberg Audio Studios. Podcasts, radio, news.
The Stock Movers Podcast, your roundup of companies making moves in the stock market, harnessing the power of Bloomberg data.
Now let's take a look at some of the stocks on the move today in Europe. We're joined by Bloomberg's equities reporter, Joe Easton. Joe, another day, another trading session dominated by tariffs, and it's electronic firms driving the markets at the open. Who's up?
Yes, some pretty big moves across the chip and also broader tech space today. So the likes of ASML gaining around 3%, as are the chip makers, Infineon, ST Micro, and even some of the more tech-focused companies in terms of the hardware firms. Logitech was gaining around 5%. So while these headlines are around potential exemptions on some tariffs for chips and the broader tech sector have been watered down very slightly, it's still seen as a positive. So Trump announcing potentially we are going to see some key exemptions across the space, and that's really feeding through. It's the main driver across European markets today. Real green stocks all across the tech space this morning.
Speaking of something else that's driving, Chinese EV makers charging ahead.
Absolutely driving forward in terms of the EV. So there was another report, again, it's all kind of tariff related at the moment, isn't it? So a report out from Bloomberg saying that the EU and China are working towards an agreement on the EVs that are sold from China into Europe. So rather than doing tariffs, they're potentially going to do minimum pricing as well. And the lower pricing of Chinese EVs coming into the European market has been the big impact on that sector. Really hit a lot of the stocks, the likes of BMW, also with Mercedes as well. But we're seeing a bit of a move higher in that sector today, potentially, because there might be a bit of an agreement coming through. So those stocks up around 2% at the moment. Stellantis also higher, Renault also higher. So positivity in autos alongside chips, two of the big themes today.
Now, Joe, of course, earnings season is getting underway, and we have LVMH reporting after the bell. Does the share price suggest they're going to be popping champagne corks or staring into an empty bottle?
Sparkling, potentially, later today, LVMH. So it's going to be the key focus, the first kind of big luxury report from that sector coming out after the close today. Now, luxury, of course, has been on a bit of a rough ride. First of all, there were the China issues, and then later, of course, the tariff impact. So what's going to be key in this report is whether we're actually seeing any impact on the initial US spending on tariffs, given what we've seen over from the US, and whether that's feeding through. With the share prices coming down, people's own personal portfolios reducing, does that mean people feel they have less money to spend going forward, feeling less flush, and therefore buying fewer of those lovely handbags and pieces of jewellery? So it's going to be a key indicator. In terms of the drinks, just to touch on your point there, I was looking at the preview from our reporter, and actually the wine and spirits business, so this is, of course, the Moët business, expected to be the weakest part of the report, potentially seeing sales down around 5%. So a lot to watch, but it's going to be a key bellwether for that sector today.
The Stock Movers Podcast from Bloomberg Radio. Check back with us throughout the day for the latest roundup of companies making news on Wall Street. And for the latest market-moving headlines, listen to Bloomberg Radio live. Catch us on YouTube, Bloomberg.com, and on Apple CarPlay and Android Auto with the Bloomberg Business app.